Hi everyone, welcome to the channel. This is Talking Sense. In today's video, I want to give you an update on SASOL. Now, why I want to do this is because 6 months ago, I put a video out. I will put the link in the description box below. But 6 months ago, I recommended, well, I didn't recommend, but I suggested that SASOL had a 50% return ahead of it. And I predicted that by June, July of 2022, that we would be at 320 Rand. Currently, I think it was Friday, SASOL closed at 329. And it came a lot sooner than I expected. We are ending February. So it's about 3 or 4 months before it actually happened. So it's a nice 50% gain that we might have had. And what I want to look at is where SASOL goes from here. And it's a difficult one to predict, but we're going to look at the graph and we're going to just look at the technicals, not so much the fundamentals in this video, and where we can see the price moving from here. Now, before we get into it, I just want to remind you that this is not financial advice. I'm also not recommending that you go and buy SASOL on Monday or Tuesday next week when it opens. This is just my technical analysis and what I plan to do myself, and hopefully it can offer you some guidance or just another tool to help you with your research. Now, you can see the chart. The chart has been lovely. It's been perfect. It's been positioned perfectly in this channel over the last year and a half, almost 2 years now. After the pandemic crash, it sold off quite rapidly. Now I'm just zoom in here a little bit. When the price falls very quickly, we can see these empty gaps in the chart. And usually these gaps are filled over time, not necessarily the next day or the next week, but for some reason, charts don't like to leave gaps. So they usually fill. And you can see after that pandemic crash in March 2020, SASOL slowly recovered, slowly sold off, consolidated, and then it rallied to that first part of that upper trend line. You can see that it closed that gap over here. Let me just circle it so you can see what I'm talking about. That gap there was closed. That there is where people panicked. There was just a lot of sellers and the price just got flushed out too quickly. And subsequently, that gap was filled. So there is one indication that gaps are normally filled, and it can happen to the downside and to the upside. So this is why I say SASOL is at an interesting juncture right now, because it's currently broken out of this channel that we see that it's been in for almost 2 years. And my price target to exit was 320. I did sell a little bit before it. I also cut my exposure along the way. But now at the moment, I'm completely out of SASOL, and it overextended to about 364, which it sets a new high for this time period over the last year and a half. And it's pulled back from 364 down to 329, where it currently is, where it closed on Friday. And the importance of that is because usually when a stock breaks out like that, which we can see it has, it retests that breakout zone. So let me just draw another circle here so you can see what I'm talking about. That zone over there is the retest of that high. That red circle was my exit point. And if you watch the first video, you'll see that we were somewhere here in this bull flag. This bull flag here, probably June, July last year is when I made the video. And this bull flag consolidation is where I decided to enter because I saw it making its way to 320. So I started buying the dips, accumulating and then started cutting out, taking profit, and eventually sold out at about 317, just before 320. And that bull flag indicated to me that it was going up, and you can see how it's respected that, and it has done that. And now it broke past that and it's retesting down. So for me, I think this could be an ideal entry again. There might still be a little bit, some short-term headwinds or short-term pullback, and that could be a good place, good time to enter. I'm not going to go in with all my capital because I'm not exactly sure if it might overextend and actually make its way back down inside that channel that it's been respecting. So this little section here might just be an extension of this channel, and it actually pulls its way. So this red arrow, we could see it pull back to 256. And then that would be a very important level to hold, because if it drops below that level, then it would show me that it's starting to roll over and that it's starting to make a lower lows. So that would be my exit level at about 250. From current levels, from 329 to 250, that would be my exit. That's about a 24% loss. So if you would want to trade SASOL and look to benefit from the potential upside, which we'll speak about now, you have to have the strategy in place of where you're going to exit, where you enter in, where you're going to add more, and where you're going to take profits before you even commit to making the trade. So let's just say 329, I'm happy with the area. I will go in with 50% of my capital. Let's say I'm taking 20,000. I'm going to throw down 10,000 at 329. Whether the share drops another 5, 6, 7%, it's irrelevant if I think it's going to 425, which I think potentially it's got a very high chance of doing. But you also need to consider that there's a lot of moving parts going on geopolitically around the world and inflation. And if you believe that the price of oil is going to stay elevated, which potentially we could see oil over $100 a barrel. Currently, we've got Brent crude at almost 94, and then WTI oil at about 92. So oil it's quite high. And if there's two sides of the debate, that oil is going to pull back to maybe 70, 60, $70. But it hasn't really been adjusted for the price of inflation. And some people are calling for $120 a barrel, $150 a barrel. I'm not smart enough to understand where it's going to go and all the forces that really influence it. But oil's also been trending upwards. And at the moment, I don't see that changing. So all we can do is manage our risk accordingly. But we also need to realize that these trades can go against us, and this is why it's important to have an exit strategy. Now, if oil does stay elevated and continues to tick up, that's not good, because that's bad for inflation. SASOL in that time is going to benefit. Fundamentals aside, sentiment is going to drive the price up over the next 6 months, maybe possibly for the next year. I don't know how long the price of oil will stay elevated. If there's tensions globally, we are in such uncertain times right now. So my bull case on SASOL is that, fundamentals aside, which I'll talk about now also shortly, but my price target for SASOL is 29% upside, call it 30%, because I believe that it's going to close the gap. And the gap that I'm talking about is from May 2019. So that's a terrible circle. Let me redraw that. Over there, you can see there's a gap there in the chart between 392 and 422, 425. So if SASOL is going to continue being in an uptrend and being sentiment driven And if the price of oil keeps spiking up, then I think there's a very high chance of SASOL overextending, call it whatever you, but I mean, it could overextend to about 430. And then I think it's going to hit its head very hard. And I think that could play out also over the next year, over the 6 months. So this trade could also be over the next 6 months to the year, like the one prior to this, which I uploaded in June, July last year. And there's a lot of tension. So that's why I think it could get up to about 430. But before it gets to 430, before it closes that gap, which I think it's going to, based on current affairs and things that are happening. And that's a nice 30% return that you could expect over the next 6 to 12 months. But you also have to be aware that if oil rolls over and inflation does start coming down and demand and all those things that we hear about on the daily, then you would have to watch this area 250. So you can sort of see that this chart can predict the news of what's going to happen. All right. Obviously, we know the share goes up and down, but at the moment, you can see how we've created these higher lows each time. There's a higher low, another higher low, another higher low. Even if it pulled back to 250, 254, it's creating that higher low, sorry. So we might see a pullback over the next few weeks, possibly even a month or two, and oil might slightly pull back too, but then these forces come back to the market again, and SASOL falls back into this trend line, respects the trend line, and gradually moves its way back up. So at the moment, just what I'm seeing on SASOL's chart, because it hasn't put any lower lows, that based just on that, oil is going to stay elevated. And I'm on the side of the fence where we could see oil at $120 a barrel, which is not very good, especially for South Africans, because your petrol price will go up, your inflation will go up. So there's a negative side to that because we are net importers. So our inflation is cost pushed, I think. So we are affected. So interest rate cuts in South Africa or increases is not going to stop inflation unless our currency strengthens so that we don't pay more in dollar terms. We don't use more of our currency to buy more oil, using more of our currency to get oil at a higher price. So there's a negative side to a higher oil price. So if you look for an inflation hedge, and SASOL is currently sentiment driven, and if oil is going to extend and push higher, then we know inflation is going to be persistent, especially within the next year, and people are going to seek out a hedge. And I think SASOL will be a beneficiary. And based from what I'm seeing on the graph, we've seen this gap that needs to be filled, and it's in the strong uptrend. So I believe SASOL, another 30% on cards, on offer, but you might see it roll over. So you have to manage your risk. All right. So I wanted to share that with you. And I also just want to briefly mention that fundamentals usually catch up with shares in the long term. In the short term, shares can be sentiment driven. Hype, people just over exaggerate. They think that earnings will be consistent. They overestimate things. People rush to the same stock. So that sentiment drives price in the short term, but in the long term, the fundamentals will catch up. So at the moment, SASOL, in my opinion, is slightly overvalued based on the financials. So the multiples will still extend. But the reason I'm saying that is because last year, SASOL hedged the oil price and the rand exchanged the dollar. They hedged, if I'm not mistaken, about $60 a barrel. Oil is currently at $93. So they're not benefiting from that. So that's not translating into extra profits because they've hedged the price. That hedge only protects them on the downside, but they lose out on the upside. So that's not translating to profits, like I said. and the Rand exchange has been hedged at 1460. So currently it's at 1490. So that's not translating into extra profits. So those that are rushing into it for sentiment driven are going to drive the price up in the short term. How long that lasts? 1 year, 2 years, 6 months, could be anyone's guess. But at some stage, it's going to rotate. It's going to roll over. And you'll see that price action take shape in the charts. So this area, yeah, where the rollover could be starting now, we could see the rollover. So that's why it's so important. This area right here, you can see how SASOL has pulled back. It hits its head at 366. It's pulling back, which is normal because it retests that breakout zone. So that could be an ideal entry, especially for traders, because that retest could be giving confirmation that that breakout was legit, and then it spikes up, which could coincide with conflict in the world and coincide with the increase of the oil price rising. But now we could see the oil price pulling back 88, 83, 86, maybe going to high 70s, low 70s. And you'll see that translate into the graph on SASOL's graph. So you'll see it pull back, and that will be a key signal, because if it starts making a lower low, if we get to about here and SASOL's price is retesting that lower end of the trend line, that could be a clear signal that it's rolling over. And that's when the fundamentals start matching the price. But where we are in that cycle, like I said, I'm not smart enough to be able to tell you oil's at 120, SASOL's at 420. All I can make is plausible guesses while I'm managing my risk on the downside. So I'm not going to go and sell my house and put $1 million and believe that SASOL is going to 420, because if they drop 30%, I'm going to lose 300,000, and that's going to be a bad lesson that someone would learn. But I mean, I could minimize my risk, put 100K if I wanted to. I can swallow a 30K loss if my risk profile, my risk tolerance level thinks, oh, well, I'm willing to get 30,000 as a reward and risk that 30,000 as a loss. But at the same time, the main thing is, if inflation does stay elevated and it doesn't get controlled, then I might potentially be buying an inflation hedge over here. But like I said, the fundamentals, they've hedged their price. So in the short term, it's sentiment. It's a narrative that's going to drive price. So you need an exit strategy too. And the reason I say that is because anyone that bought SASOL a long time ago over here, buying and holding and forgetting, in my opinion, is no longer a strategy, because you can just see it's taken years before all these people that bought in here, you can see there was a strong level here, very strong level here. I can just put a couple of lines just to show you what I'm talking about. There's a very strong level over there. You can see that sideways pattern. So the reason SASOL has hit its head over here at about 364 is because those people that have been holding SASOL since 2016, 2015 in the sideways movement are going to want to get out, just because they've now recouped their losses and been holding in the red for 3 years potentially. They've had enough of it. I'm getting out. That's just the normal psychology of the market. So you'll see that first resistance level that you can see, it's almost to the T there, that green line that I've just put now, it just bumped its head right there. Because if you zoom out of the chart, you'll see that that's a very strong level over there. So there's lots of people waiting to get out. All right. But in the short term, there's going to be more buyers coming in than the sellers selling out. Those sellers are going to sell out in the liquidity, ones that want to get out. And I think it will close that gap, but it's not going to do it straight away. All right. So I've mumbled on a little bit, but I hope it's a bit clear. Let me just take some of these lines away so we can all just see the graph a little bit better. And let me just recap what I've mentioned here. So there's two possible outcomes. It closes the gap, which is negative and positive for South Africans in the long run, because it's going to close this gap if the oil price is breaking 100, because short-term narrative will send the price up. If oil starts pulling back, then that's going to reflect in the graph, and SASOL will start rolling over because they've hedged their price. So their income is predictable and the high price isn't translating to extra profit. So you keep your eyes on that. Also, don't be scared if the price of oil is going up, it's going to stumble a little bit here because there's going to be people wanting to exit. But we look again, we'll follow the price. I'm going to take the risk. I'm going to go in on the trade Monday, Tuesday. I will take my first entry at about 330. I just take the profits that I made from the first one, put a little bit of my own capital, put it in, manage the downside risk, prepare to hold it for 6 months to a year, exit once it closes that gap. All right. And then we will see if it respects this, overextends, maybe pulls back into this channel, consolidates, and then starts moving up within that channel. So there's a few things to look out for, a lot of moving parts, and we'll see what happens. So I'll end the video here. Let me know in the comment section what you think. And if you think it's going to overextend, do you think the oil price is going to go over 100 or it's going to start pulling back? Let me know your thoughts, and then I would love to hear from you. So for now, we'll end it there. Thank you for coming to the channel, and I hope that there was some value in this technical analysis. Please, if you don't mind, I would love for you to share this video, hit subscribe if you haven't, and I will see you in the next video. So from me, Talking Sense, bye for now.